What's up, everyone? It's Scotty with MoneyVest. So let's talk about Tesla stock. And Tesla here absolutely getting destroyed, down a little bit over 5% on the day. That's right. It is selling off pretty aggressively. Actually down over 6.5% by the time I'm recording this video. So about a minute ago, it was only 5%. Now it's down over 6.5%. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. The link to our Discord and Patreon is going to be down below. We'll love to have you on board. There is a 16% annual discount that's available till the end of this month. You do get early access to our MoneyVest Pro platform in 2024, intrinsic value spreadsheets, members only private videos, trading view charts, buy and sell alerts, options alerts, volatility spreadsheets, S&P 500 valuation. Everything is going to be included with the link down below, and we'd love to have you on board. And again, if you have any questions, feel free to please reach out, and I'm happy to help. So one catalyst took down the entire Tesla train, and that was, of course, an updated sell rating and initiating a new analysis on Tesla by HSBC. So analyst Michael Tyndall launched coverage on Tesla stock with an equivalent of a sell rating. His target price was down to $146, down 34% from the recent levels. Of course, might be even lower now considering the stock's down 6.5%. And the issue appears to be valuation. And that's been a big concern on Wall Street for a very long time. We've obviously gone back and forth. There's been a huge debate on Tesla's valuation for the better half of the last 5 years. And the issue appears to be valuation and how investors tend to view the company. And Tesla is more than a very expensive auto company. Its ambition is to be an innovator, which underpins the valuation. And a charismatic CEO with a cult-like following feeds into the innovator narrative, but timing of delivery is far from certain as well. Simply put, electric vehicle business isn't worth what Tesla stock trades at today. What is more, Tesla and other businesses, including energy storage, self-driving cars, robots, and artificial intelligence computing, all face regulatory hurdles. That means slower than expected growth in the future. And the Tesla stock is worth more than $700 billion at current prices. At HSBC's target of $146 per share, the company's market cap would be closer to $470 billion as well. Now, this is a catalyst we're going to come back to, but Gary Black pretty much mentioned this in his tweet. New Tesla research initiated by HSBC with the equivalent of sell rating getting blamed for Tesla's minus 5% decline today. Most bearish part is his $146 price target, which comes 40% from FSD, Dojo, and Optimus, which leaves us $90 a share for the traditional EV business. Now, to give you a little bit of a context how far apart these two analysts are, for reference, Gary Black has put a $300 price target value in the EV business alone based on 2030 EPS of $22 per share, 30 times P multiple, and a 13.1% cost of equity. Again, we use these types of models to better understand what is going to be the valuation. Now, analyst Michael says his valuation is 50% discounted cash flow and 50% based on global tech multiples. Without seeing his analysis, we can't poke holes in it, but our bet is the analyst is assigning a multiple based on the tech category rather than his projected growth rate. If so, this isn't consistent with financial theory. We'll try to get a copy of the full report. Now, look, when it comes to valuations, what I want to say is you want to go with a valuation model based on two things, okay? Number one, what cycle is the business in? Is it a startup? Is it in growth? Is it in maturity? Or is it in decline? Okay? These four models, cycles, basically business cycles, will help you understand what valuation multiple to use for that company. Okay? Because it really comes down to the analyst, right? You can use a discounted cash flow. You can use a discounted earnings model. You can use a dividend discount model. You can use, price to sales model. You can use enterprise value to EBITDA, discounting back EBITDA and calculating for enterprise value and then applying a multiple. There's so many different ways to calculate, right? It's like there's so many different ways to skin a cat, right? But we have to understand what kind of cat is it and how mature is it, right? Before we go about doing it. So it's the same with businesses, right? We have to understand what business cycle it's in. And in my opinion, at least, Tesla right now is in a growth phase, right? It's in a very much of a growth cycle where it is growing, right? Revenues, earnings, profitability, deliveries, everything's moving in the right direction and it's exploding right now. Of course, with the higher interest rates, we're starting to see that growth rate slow down, but it is nowhere near close to maturity, right? It's not like Apple where it's already a mature business and now it's only growing at 10, 12%. No, deliveries are still up 30, 40, 50%. Revenues are also growing in that rapid rate. Of course, we're now starting to see a little bit of that slowdown because of higher interest rates, but I would still argue that it's not mature yet, right? It's not a mature business. It's still a growth business. Number two, the certainty of the numbers that you're forecasting. Okay, and you want to limit those down as few as possible, because think about this. The more variables you try to analyze and forecast, the more variance there's going to be in your analysis. And that's one of my biggest concerns with Kathy Wood's analysis as well. A lot of times when she's, let's say, analyzing Roku or Datadog or, or Uber, for example, or any of these advertising companies or anything that's innovation driven, she's forecasting for every single metric. And it may seem like, okay, that's a very, very in-depth analysis, right? You might think to yourself that, wow, she's analyzing this, 20 different metrics that she's forecasting. But the bottom line is that those 20 metrics that she's forecasting, or basically, assigning a value for the future, could be significantly up or down, and that can really throw off the overall analysis significantly, right? So you want to be able to forecast as fewer, in some cases, as fewer metrics as possible, so that there's less variance, right? And there's less uncertainty related to the outcomes that actually end up coming out. So going over to Tesla, as you guys know, that my fair value is, I would say, kind of lower, obviously a lot lower. $136 is where we are, because, I for one, do agree with Michael in this example, because, Tesla's other things, which we have talked about, technology, artificial intelligence, FSD, Optimus, Dojo, supercomputing, energy storage, all those things are huge icing on cake. These are things that, if they happen, fantastic. If they don't, no big deal, right? I'm as an investor very indifferent towards those things happening with Tesla. My main sole purpose with Tesla is electric vehicle transition, the adoption of EVs, okay? And for that very reason, that's why my fair value is at 136, because if I'm only looking at Tesla from an electric vehicle standpoint, I do think that it does deserve a lower multiple, right? So I do think that, valuation, yes, is indeed high. That's why if you go over to my intrinsic value spreadsheet, it is going to be lower. Now, that being said, if I start accounting for all those technological advancements and start pricing for all that in, yes, my intrinsic value is going to be much, much higher. So while Michael has a $90 electric vehicle business fair value, or price target rather, I have it closer to 136 if I'm simply basing it off of just an understanding of how quickly earnings and revenues can grow based on electric vehicle sales alone. So that being said, technically, yes, Tesla does look incredibly weak as we continue to trade in this downtrending channel of lower highs and lower lows, and we're coming back down to those low 200s where we're starting to see a little bit of a breakdown below this level as well. So, but this right here is the downtrending channel. Again, lower highs and lower lows continuing to trade sort of like in this pattern. And of course, that next support, in case we get a breakdown further down, below this $193 per share is going to be as low as $151 per share. So those right there are going to be some levels to watch for Tesla. Now, again, we're going to find out next week is inflation, so we'll see whether Tesla can actually trade down to that level or not. But the first more intermediate support is going to be low 200s down to 193, with a resistance all the way up to 241 to as much as $250. And like I said, interest rates are definitely hurting. A lot of companies like Tesla, like Enphase, but it's got a lot of potential, no doubt about it. It's got lots of opportunity to unlock in a lot of different sectors of the market. But I kind of have to a little bit agree in terms of the valuation that yes, it is a little bit more on the expensive side, given that the growth rate is also slowing down. And for that reason, my intrinsic value is closer to $136. But that still doesn't take away from the fact that I believe that Tesla's got a lot of potential, and all that technological advancement is going to be the icing on cake and can obviously push us to a much bigger and more valuable company in the future, 5 years, 10 years from now, if executed well. All comes down to execution, because over here, they also, mention that CEO Musk is an asset, but also represent a risk. If ideas and ambition are key facets of Tesla's valuation, then having a charismatic and convincing CEO is undoubtedly an asset. To our minds, it supports the hope element of the group. But he also did mention that is going to be a risk for Tesla as well. So that's going to be all for today. Let me know your thoughts down in the comment section below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. What are your thoughts on it, Tesla? Do you agree, disagree with this analysis and this price target? Let me know in the comment section down below. And as always, happy investing. I'll see you all in the next video.